The stock market is coming down after Fed Jerome Powell's speech that he just gave about an hour ago. Now, Fed Jerome Powell was expected to speak for about half an hour long. He only spoke for 10 minutes. And what he said was very clear and concise. The main message of the day is there is no Fed pivot coming. The Fed is not going to start cutting rates, at least for a very long time. That was the whole reason why the markets rallied in the first place, was this whole Fed pivot idea. The Fed has taken that off the table, so now we are seeing a very negative market reaction, and we'll see just how negative this is, if it's a one-day event or if it's a multi-week event, but you're definitely feeling the volatility and the pinch in your portfolios here today. S&P 500 now down 1.85%, the Nasdaq down well over 2%, Russell 2000 down well over 2% as well. So let's get into all of this information. Let's not waste any time. So this article comes from CNBC. It says Powell warns of, quote, some pain ahead as the Fed fights to bring down inflation. Fed Chairman Jerome Powell on Friday pledged that the central bank will, quote, use our tools forcefully to attack inflation that is still running near its highest level in more than 40 years. In his annual Jackson Hole, Wyoming policy speech, Powell added that higher interest rates will likely persist for some time. The historical record cautioned strongly against prematurely loosening policy, and that's basically what he said. He went back to the Paul Volcker era of the 70s, the last time we've had inflation this high, and basically was pointing out what they did wrong and why that whole inflation battle lasted almost 20 years was because they pivoted too early. Once a recession came, they cut rates. 2-3 years later, inflation went to higher highs, right? Talked about entrenched long-term inflation expectations that were not quite there yet, but they're still way too high, and we're still way higher than the 2% inflation target that the Fed wants. So basically what the Fed was saying, until we see inflation on a steadfast move to the downside, not just food and energy, but your core CPI, don't expect a pivot. Don't expect a pivot at all. He was basically saying that we need a recession, or we just need inflation to come down. That's basically what he was saying. He said there's going to be pain ahead. And this is the exact opposite of what the markets had thought really over the last couple of weeks that caused this whole rally, was that the Fed will cut rates by mid-2023. That's what the bond market is currently pricing in. Now people are saying, are they going to cut rates in 2024? Maybe it's going to be halfway through 2024, or maybe even 2025. That changes the valuations of companies. It changes what the 10-year bond should yield, thus making your borrowing cost more expensive. So I think that is key. That is the big thing that we have been waiting for throughout this whole entire week. The S&P 500 continuing to go lower as we speak, down over 2%. So what do we have in store for the Fed futures? And this is predicting what the Fed will do at the next FOMC meeting. That is on September 21st, 2022. Now, keep in mind, you have a lot of data coming next week, but you don't have some of the core data that the markets like to react to around the Fed, like CPI. That doesn't come out until September 11th. So we have really this whole entire week, you could say, to burn this next week. We're probably going to get the market reaction of this Jackson Hole speech next week, and then the week after that is going to be a little bit more eventful as we get CPI data, as we get more data that will actually give us clues to what the Fed is going to do. But at the time of recording this video, 55% of market participants are expecting a 75 basis point rate hike. 45% of market participants are expecting a 50 basis point rate hike. So the probability of a larger rate hike did go up today. And I think, just the long story short out of all of this, the markets have been rallying because of a Fed U-turn. It is confirmed we're not getting a Fed U-turn. So that is instinctively very, very negative. And that's just the overall bottom line to all of this. The question is, how long will this last? How low is the stock market going to go? That's the real question. Is this going to be a one-day event, or is this going to be a multi-week event? That's something I cannot answer for you guys, but it does look like at least it could be a next week event at the very minimum, because today is Friday. Next trading day will be Monday. That is 3 nights away from right now. So you're probably still going to get more digestion over the weekend coming next week. That will probably give us more clues to how to actually position our portfolios. Now, nonetheless, guys, what we're seeing with stocks like AMC, down 5.59%. You're seeing Nvidia down 5.5%. You're seeing Apple down 2%. You're seeing Google down almost 5%. It's a massive beating across the board. Stocks like AMC taking a little bit more of a beating because those hedge funds continue to short the stock. It's obvious when you look at the Ortex data, which we will go ahead and do right now, that the short interest continues to climb within the stock. You can see short interest of free float currently sitting at 21.18%. That is extremely high, ladies and gentlemen. That is up 14% over the last 7 days, when the short interest was sitting at about 18.58%. The amount of dollars currently held in short positions on AMC stock is sitting at $1.04 billion. Free float out on loan up a whopping 31% over the last 7 days, currently at 37%. That is very, very high. We were only at 28% 7 days ago, so a 31% increase. That's nothing to sneeze at. There's a lot of shares that are currently sold short that could be used against us, but it looks like a lot of those are likely already being used against us. Now, the shares out on loan, 190.71 million. That is also up 31% over the last 7 days. You're also seeing the days to cover up about 25% over the last 7 days, now at 3.85, meaning the volume has been slightly lower. It's going to be a lot harder for shorts to actually get out of their positions if they start to feel the squeeze. Now, you are seeing the cost of our average ticking up today, now at 18.46%, cost to borrow max at 26.21%, and cost to borrow minimum at 10.79%. So the data here is sure as hell looking pretty damn good, if you guys ask me, if I do say so myself. Now, you are seeing two options coming through worth about $50,000 in total. Both of those are September 16th $10 calls. Like I said, about $50,000 worth. So that is a good sign, 100% positive order value on the day, but it's not indicative of really anything, if I do say so myself. I think the biggest story is going to be, how do the markets react to what Fed Powell said today over the next week or two? And I think that is the big question. Now, I will say, if you pull up the 15-minute candlestick chart, the low we actually seen for the week was 411.13, and we just hit 410.88. So you really want to close under the low of the week, which is back here, like I said, 411.13. By the end of the day, if you get a close under that, it's going to be pretty brutal. And the high of the day so far was 421.02. You're at 411. So we have dropped $10 round trip today from the high down to the low. And I think that's something, to keep in mind. Keep in mind those key levels. There's been a lot of fighting back and forth around 412 as well. If we can hold above 412, it's not going to be as bad of a day as it could have been. If we do close under 411.13, or more specifically under 410, that is going to be where things are not going to be looking so good. And really, I think that big move might come towards the end of the day. It wouldn't surprise me to bounce around in this 413 to 411 range for at least a couple of hours. Now, let's get back to APE. Let's talk about APE. What's going on over here? So, you do see the estimated short interest of free float sitting at 30.25%. Free float out on loan 30.25% as well. $1.06 billion worth of short positions on APE. And you are seeing the days cover at 2.18, cost to borrow at 9.84, and 100% share utilization. You're seeing the cost to borrow max at 35.15%, cost to borrow minimum at 0.65%, and cost to borrow average at 16.83%. So the data over here certainly looking good as well. I want to see what the failure to deliver data does look like around AMC and APE, especially over the next couple of days and couple of weeks. I think that could be pretty interesting. So there is all of that. If we do take a look at the option activity, you're still seeing a very small amount of calls that are in the money for this Friday, for next week, and for the week after that. Really, throughout the whole entire option chain, as AMC stock has fallen quite dramatically. Now, you have about 86,000 calls that are currently out of the money for this Friday. For next week, you have about 31,000 calls that are out of the money as well. If you can get that move up, that will be a bullish thing for AMC. But really, it depends on what the markets are going to throw at us. If the markets are down like this next week, well, it's going to be very hard for AMC stock to not fall, right? It's definitely going to be a challenging thing. Now, on another note, the Fed's preferred inflation measure shows price pressures eased in July. The personal consumption expenditures price index showed a year-over-year rise of 6.3% in July, down from 6.8% in June. The reading actually fell 0.1% month over month. The core PCE index, which excludes volatile food and energy prices, had a 4.6% rise year over year and a gain of 0.1% month over month, coming in softer than forecast on both counts. So that is definitely somewhat of a bullish thing that happened today, as well as the Michigan Consumer Sentiment Survey did show some very positive things, potentially out of inflation expectations over the next couple of years. But that is not enough to offset the markets getting upset by the fact that there will be no Fed U-turn, at least for a very long amount of time. Now, with all of that being said, let's take a look at AMC on a technical basis. We are sitting at $9 with the adjustment that we are seeing for AMC stock. As you guys can see, the chart's kind of been adjusted here, and the low of 2022 looks like it was May 12th 2022 after the adjusted price on the chart, and you're sitting at $9, so we're still well above the low of 2022, which should be seen as a bullish thing because a lot of stocks look at BBBY. That thing is not above the low so far of 2022. Some stocks have gotten really destroyed over the last couple of weeks. So is AMC stock, but it definitely could be worse. Now, the RSI is at 35.35, so definitely on the bearish side, and the MACD is very much on the bearish side as well. So that is pretty much going to be all for this video. Definitely looks like the Fed is not here to save the markets. The U-turn is gone. Question is, how bearish does that make the markets? Leave your thoughts down below in the comment section on exactly that. If you guys want to come trade with me live in real time, link down below in the description. As well as that, get your free stocks with Webull, Moomoo, and Public. Thank you guys for tuning in, and I will see you in the next one.